Welcome to the Retire with Peace podcast, the podcast where we help you create a fulfilling and stress-free retirement. Each week, we bring you expert advice, practical tips, and inspiring stories to help you plan and live your best retirement life. Whether you're nearing retirement or already enjoying your golden years, this podcast is here to support you every step of the way. Let's embark on this journey together and discover how to retire with peace.
Welcome back to the Retire with Peace podcast. As always, I'm your host, Dave Zegel. We are going to do another episode here about charitable donations. Our previous video talked specifically about state tax credits, and we talked about Missouri tax credits specifically, but a lot of states offer similar tax credits, except for those states that don't even have income tax. That's a whole different story. But last video was focused more on the tax credits. This one, we want to focus on using donor-advised funds. We talked about this a long time ago on this podcast and want to cover it again because it can be a powerful planning tool. It's not for everybody, but it's a way to make donations in larger chunks and batch our donations together for tax purposes, especially when we're just not sure where we want to donate the money yet. Or maybe we want to establish a fund where that fund can then grow and be able to donate even more in the future. So let's step back a little bit and talk about what a donor-advised fund is. A donor-advised fund really becomes a separate legal entity once you make a donation to it. So it works just like making almost any other charitable donation. There's some rules around what you can donate and what you cannot. But essentially, you're donating money or donating stock. That's even better if you can donate appreciated stock because you get to skip out on the capital gain. You don't pay any capital gains tax if you have stock that has gone up and you donate that to a charity. So if you give money to this donor-advised fund, you get that charitable donation in the year that you put the money in the donor-advised fund, regardless of whether that money has then gone from the donor-advised fund to an actual charity itself. So we've had a lot of cases where perhaps it's a high income year for someone, or maybe it's their last year of income before they retire, and so their income is going to fall off in the future. And in those future years, they're not going to need the deductions, all that stuff. We've had a lot of those cases where instead of spreading out the charitable donation over many, many years, like people were already planning on doing, maybe we just accelerate it, put it all in this 1 year, not all, but a lot in this 1 year, get a higher tax deduction now, knowing that we're going to be more in a standard deduction in the future. So it's a great way to have some tax planning and say, well, gee, if I'm planning on donating, I'm just going to make up numbers. Let's say I'm going to donate $10,000 a year for the next 10 years. And I have the cash already. I have either a cash or an investment balance. Rather than, say, donating that every 10 years, or every year for 10 years, maybe we take all 10 of those years and put it into one. That way we can get a deduction high enough to get over our standard deduction on the tax return. Because keep in mind, on your tax return, you either get a standard deduction or itemized deduction. And the itemized deductions are mortgage interest, state and local taxes, charitable contributions. If all of those total more than the standard deduction, then you can take that higher itemized deduction amount. In a lot of cases, especially now that the standard deduction is higher, we're not seeing as much benefit tax-wise from charitable contributions. Now, one little quick note that we covered in the One Big Beautiful Act is that there is now an opportunity to take some charitable deduction, even if you're in the standard deduction. And we're not going to cover that in this one. Go back to listen to that video because we're not going to get too far off track here. But now going forward, there is some charitable deduction allowed, even if you're taking standard deduction. Regardless, we may still want to have a tax plan where we batch a big charitable deduction in 1 year and then take the standard deduction, or maybe just take that smaller charitable contribution deduction going forward. It's really just a tactic to maximize our total contributions over however long we're planning on doing this. So it's not about a right or wrong amount. It's about saying, okay, what are we planning on doing for charitable contributions? How can we get the greatest deduction over that period of time? And sometimes that means taking a lot of donations and putting them all in one year. The challenge is a lot of times people say, well, I don't really know exactly where I want to donate everything yet, or I don't want to donate it all to those charities right away. There's lots of different things or reasons why you don't just want to put all the charitable donations into all the charities all at once. Well, you can use this donor advised fund to put the money in the advised fund, get the charitable deduction now, and then over time, make the donations out of the donor advised fund to the various charities. Also, if you choose to, you can have the money inside the donor advised fund be invested and potentially growing over time, therefore allowing you to make even greater donations. So you get the big tax deduction now, you can grow the money and be paying it out over time to the various charities. It can be, like I said, it's not for everybody, it's not for every situation, but if you can identify a specific benefit from batching a big donation together and possibly even making that donation greater over time to charities, it's a great tactic, a great tool to use. So keep that in mind as you're looking at your tax projection this year and the following years. If you're doing a lot of charitable contributions or if you're planning on that in the future, keep a donor advised fund in mind as a possible tool to not only benefit the charities, but to benefit you from a tax perspective.